Zach Phillips is an advisor at Oak Securities, and he's just written a very interesting report on Helix Exploration. The target price Zach sets for Helix is 93p, which is quite a target to see. So tell us why you've done that, Zach.
Well, I think what you're seeing at Helix is obviously they debuted on the back of a very interesting exploration target, but what they've been able to do quite quickly, and as the Rudyard transaction shows, is that they've been able to move their way up the discovery and development curve quite quickly, and the rump of this valuation actually sits in the appraisal of the shallower formations for the Rudyard discovery.
Yeah, I mean, there's quite a big valuation put on the sort of shallower assets. I mean, there's some deep stuff as well. But so why don't you talk about Rudyard Rudyard in a little bit more depth, so that the audience can get more of an appreciation of why you see this as being such an interesting acquisition.
Well, I think you've effectively you've got two bites of the cherry. You've got the natural gas, which in a lot of circumstances would be a viable target in and of itself. But the real gem in the crown here is the helium concentrations. Now, given where the helium market is currently, and we for obvious reasons we're quite conservative in our outlook for the helium price. We look at around about $420 per thousand cubic feet, rising at around about 3.25% thereafter. But the market in the US can range between $500 to $1,200 per thousand cubic feet for helium, which really is quite exciting, because it means that even relatively small accumulations and small concentrations of helium are highly commercial. And it's really all then about, especially in Rudyard's case, about optimizing the well completion design so that you can then optimize the top side, so that you can get to a point at which you're balancing capital costs against flow rates, and ultimately what you really want to do is try and recover as much as you can as cheaply as you can. But in this instance, because the costs associated with, or the selling prices associated with helium are so high, it's all about maximizing the flow rates, and that's why I think I'm really quite excited about the Rudyard discovery, because it's very rare that you can tap into accumulations which, granted, are relatively small but have such good returns.
Yes, and quite quickly as well. I mean, you talk at the beginning of your note about near-term cash flow, and you then go on to put a valuation of $76.5 million on the contingent resources. And you mentioned just now that there's a bit of work to be done, but it seems that the timetable could unfold production fairly rapidly. What's your understanding about how the production or the schedule towards production looks?
Well, I think the first thing to say is that there's no novel engineering required. There's no specialist engineering services that need to be retained. It's quite standard engineering that will be applied in separating the helium from the inert gases. And it seems strange to be talking about natural gas as an inert, but in this instance we most certainly are, because we really want to focus on the helium. But I think the really exciting thing here is that well testing can be completed relatively quickly. That will then lead to an optimized completion design, and then that will give you your boundary conditions for your top sides, your gas plant. Now, here, lead times, depending on the type of engineering that you require, can be quite long. But because we're not talking about anything especially difficult here with helium. I mean, it is in extremis, because we're talking about quite low temperatures and in some cases quite significant pressures, but they are quite standard from an engineering perspective. So, you know, the US is a very deep and liquid market when it comes to providing coded vessels and equipment into the gas industry. So, you know, you are going to be able to access quite a large number of potential engineering constructors that are going to be able to deliver the parts for you as you require them. You know, if we were talking about a situation where you had a very remote helium discovery, where you didn't have the access, or rather the depth and the breadth of the engineering service providers that you have in the US, the valuation wouldn't have been as high, and I wouldn't be talking in terms of near-term cash flow. So I think the fact that this is in Montana, this is in the US, all really come together and almost like a perfect storm of positivity actually allow you to say, yep, your lead times are going to be as quick as they're going to be, or is going to be as short as they're going to be anywhere, and you're going to be able to access anything that you need on fairly short order, and in a competitive pricing environment. So, you know, I'm quite optimistic about the if you like the program, once they've been able to establish the flow rates that they can produce at.
So would you say that then, from an investor's point of view, the news on the flow rates will be the first key item to look for?
Yes, and I think that's, you know, that's really going to be your key catalyst for revaluation, I think. Now, once you've established commercial flow, and remember, because of the high cost of the high selling price of helium, your barrier to commerciality is significantly lower than it would otherwise be. But what you get is a real sense that even relatively small volumes are going to be commercial, because such is the dearth of helium in the open market, that, you know, what you lose in production rate, for example, you may well be able to make up in price. So it is really going to be quite exciting to see where that actually ends up. And, you know, you're absolutely right that the flow rates are going to be key, but they're not going to tell the whole story. So it does need to be, you know, a well thought through appraisal and development program. And, you know, the team that they've got on board there are well suited and well experienced enough to be able to deliver that.
Yeah, tell us a little bit about that team, because some of them may be already known to our listeners here at Vox. Is it a team with specific experience in helium, for example?
Well, I think for that you've really got to look to Bo Sears. Bo is you know, he's the guy that's really going to unlock the value in there. David Minchin is a fantastic geo, and I think that the combination of those two specifically to this point are going to be what really unlocks the value. You've got Bo's depth and breadth of knowledge in the helium market, and you've got David's understanding of the subsurface, and it's really going to be unlocking those twin issues that are going to really be the driver and actually push you maybe even beyond my $77 million valuation northwards, because this really is a a spectacular market at the moment for helium. The privatization of the Federal Helium Reserve, almost unprecedented, but it's a clever move, because the helium market isn't getting any smaller, and the supply side at the moment isn't getting any bigger. So that means that the prices can only go one way, and it really is a golden opportunity for the team as a whole to be able to unlock that potential.
I mean, you're obviously sort of highly encouraged by the deal that's just been struck. You talk in your note about the attractive valuation and the fact that some of the payments in shares. Do you think that this is setting a precedent for Helix? Do you expect them to do further deals? How do you see the company's sort of corporate strategy shaping up in the sort of medium to longer term?
Well, I think it's very much going to be on a deal by deal basis. I think in this instance, the team saw an opportunity, and they pursued it. They've done a fantastic deal for shareholders. It's not often in this market, especially in a helium market that's as tight as it is in the US, that you see a transaction that is accretive to shareholders. It may be accretive to value, but by the time you add in the dilution of the shares, it becomes dilutive to shareholders. But that's not so in this case. So, the team are well aware of their duty to shareholders, and I think that certainly from my perspective, it really underlines the extent to which they see their responsibility ultimately through to the owners of the company, which are the shareholders. And in being able to structure a deal like this, they've given themselves a good chance at being able to leverage their existing cash resources. They've been able to add value to shareholders on a per share basis by negotiating a transaction that is structured the way it is. And also they've been able to give the vendor the access to the upside, because ultimately, $100,000 in cash is neither here nor there for the value of the asset. But where you actually see the vendor's gains being tied and allied to that of shareholders, and management ensuring that the vendors' interests are aligned to those of shareholders, is in the $150,000 worth of shares that they've issued. That half a million shares or thereabouts can really see a real stretch, and to be honest with you, it makes good sense for the vendor as well.
I mean, I suppose certainly if the company ends up hitting your target price, the vendor will be very happy, as well as all the other shareholders.
Absolutely.
So what I mean, investors don't have that many helium companies to choose from, or I could phrase that another way. It's hard to gain a deep and broad understanding of how helium companies operate, because there aren't that many of them that are listed. So what would be your couple of pointers, your sort of bullet points that investors should really note when it comes to appraising the opportunity that might be on offer from Helix or another company like Helix?
Well, I think the similarity between oil and gas companies and helium companies is quite strong. They'll use the same drilling technology. They'll use the same approach to monetizing and valorizing the gas. They will even use a lot of the same terminology. I mean, in this note, we've used the 2C, 2P, 2U terminology quite freely. And in this instance, I think that that's going to be a significant positive, because you can leverage the deep pool of oil and gas knowledge that is out there, and if you like, just apply it to a different situation. So there's no need to relearn or recalibrate or reimagine the way that you can look at these companies. It is very much winning and selling a commodity gas from the earth. It just so happens that it's a noble gas and it's helium rather than natural gas, or in some cases, there are even CO2 wells out there. So I think that there is the pathway that a lot of helium companies will follow will be very familiar to investors in oil and gas, because of that fact. Now, that's where the similarity ends, I hasten to add, because in the context of helium, natural gas is actually a something that you don't want in the flow, because it's actually a lot easier to get rid of. So a perfect helium discovery would be filled with either CO2 and nitrogen plus the helium, or just nitrogen and helium. Now, there are very few accumulations that are like that, and they always seem to be accompanying natural gas. So it's something that gas engineers and petroleum engineers and subsurface engineers are all very familiar with. So if investors were looking for a way to try and understand it, I'd take a leaf out of the company's book, or the helium company's book, in that leverage the existing oil and gas understanding and terminology, and you're not going to be far wrong. The only difference is that the concentrations are normally a lot smaller. A good discovery in the US is up to 5%, but it's the price, and it's the price per unit volume that really differentiates the helium market from anything else. We know at the moment from casual observation that it's significantly further north of our 420 that we use as a benchmark to value. And we have seen, the US Department of Trade has published statistics that open market prices being sold for export have exceeded $1,500 per thousand cubic feet. So, it's an exciting market.
Yeah, so a quick word on that before we wrap it up, Zach. What is helium actually used for in the modern global economy?
Well, helium, it has analytical uses, because it's actually it's a highly mobile gas. It doesn't combust, it doesn't burn. So it's often used as a carrier gas for gas chromatography and for mass spectrometry. But more than that, because it's such a small molecule, because it has such a low vaporization temperature, it's used for supercooling magnets, and MRI machines are essentially useless without helium to keep the supermagnets cool. And it's also used as a barrier gas in semiconductors. So if everything that you look at today, at some point or another, whether it's your handheld device, whether it's your monitor, whether it's your tablet or your laptop, it will have at some point had helium involved in its production process. Without it, the current production of microchips, the current state of the art medical imaging will just disappear. These aren't markets that are driven by the economy. They're not driven by if you like, the demand side, because the supply side is so tight. And even if you were to get fluctuations in demand of between 10 to 20% on the demand side, for example, given that the supply side is so tight and is so limited, you're not going to see that feed through to prices at all, in my opinion. And in many ways, it's a perpetually increasing price that you can see from here on in, because the number of applications that you've got are increasing exponentially, and that means that the demand will increase exponentially, but we're just not keeping track on the supply side. And I mean, yes, we've been relatively conservative in the way that we've approached our pricing, but I can see, without too much difficulty, I can see prices north of 500, north of 600, easily within 2 to 3 years.
So definitely an opportunity worth tapping into, or attempting to tap into. It's fascinating stuff. Thanks for joining us, Zach Phillips from Securities, and taking us through your recent note on Helix Exploration and the helium market in general. Zach, thanks a lot.
Pleasure. Bye-bye.
Wow.